Hello, everyone. Welcome back to another week as we are going to be deliberating on diving into the financial markets to unravel the potential trajectory for the new week. Happy Monday to everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, first of all, let's run through our daily routine to just confirm that we are all on the same page. If you can hear me, if you can see my screen and you can hear me loud and clear, please let me know in the comment section by typing in hi. Thank you very, very much as you do so. So I will be taking some time to load up my comment section and I look forward to seeing your feedback so that we can get the session started. Hello, everyone. I need your attention for a moment. It has come to my notice that some comments are circulating, suggesting financial assistance or directing you to other platforms. I want to make it abundantly clear that these comments are not endorsed by us or Extreme Speed whatsoever, and they are likely the work of spammers. So please be cautious and avoid engaging with any messages that encourage you to seek financial assistance or redirect you to external platform. These individuals are not affiliated with Extreme Speed and their intentions may be harmful. We are committed to providing a safe and positive environment here. Thank you very, very much. So I can see a couple of comments here. Thank you. From 00007 carry. Thank you very, very much. I can see Romato. Good morning to you. Abdulaye47. Good morning to you. Amardine. Good morning to you too. Thank you for these confirmations. Hello, Steamroller. Good morning to you. Thank you. Thank you very, very much. Hello, Carrie. Good morning to you. Glad to have you around with us. Okay, we shoot to the profitable week ahead. So I think with this handful of feedbacks, I want to take this as a confirmation that we are good to go this morning. Hey, hello, Panoyo, 621. 32975, Kole Sarimi 979. Good morning to you guys. You guys are just wonderful. And in fact, I am loving the energy in the house this morning. As I can see, we are all ready to get into the market and make and replicate what we have been doing in the last couple of weeks. So welcome, guys, again. So I welcome you once again to yet another promising edition on this Extreme Speed Live as I welcome you, of course, to the first edition of the week. For the next 1 hour, I'm going to be your host. My whole name is Sharif Daramola. So for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be delving into the current market structure and looking at things from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today. And today being the first trading day of the week, this is a very good time for you to drop in the comment section any assets you want us to be monitoring throughout the course of the week. This is the most appropriate time for you to do so. So if it is cryptocurrency, currency assets, commodities, options, whatever you have, feel free to drop them in the comment section and I will try as much as possible to incorporate it into our plans for this week. However, personally, I already have a handful of assets that I wish we look out for. In fact, I have up to like 6 on my watch list. But let's see if time will permit us to run through all this, or we probably might be doing the usual 4 we normally take on a weekly basis. Let's see what time can permit us to do today. Now, for those of you who are joining us for the first time, you are highly welcome, and I'm very, very excited about having you guys around with us this morning. I know you will be wondering what this is all about and what is it that you are doing on this particular platform. Well, as technical traders, we usually gather here every day as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of the session so you don't miss out on the insights that we will be sharing during the course of the session. Well, my aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you, and I encourage you to actively engage in the comment section. So with that being said, here we will be diving right into the business, and as usual, the first thing we normally do in this community is to keep tabs with the fundamental factors that are likely going to be affecting the market sentiment for today. And for those of you who have been with me for a while, you know how important it is for us to keep tabs with the fundamental factors, as this event usually reflect on the chart as price action. Hold on a second, please. All right, sorry about that. I had to attend to some technical issues here. So like I was saying earlier, these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, on the economic calendar for this week, and based on the assets I want to be looking at for this week, we shall be focusing on both the United States and the United Kingdom economic dockets. Now, we usually focus on high impactful event, but for today, Monday, December 11th, we do not have any high impactful event to look out for. And in fact, I took it a step further to include the medium impact event so that we can at least have something to guide our trading decisions. But unfortunately, there are no high impactful or medium impactful events to look out for today. So what we will be doing this morning is to rely on our technical skills and use that to position ourselves in such a way that we can capitalize on the next potential move. So with that being said, here we will be diving right back into the business. And the first asset we will be taking on today is going to be, as usual, the USOILSPOT. And in fact, at this point in time, I already have a sell position triggered, and I will be taking you through what led to the decisions and how we can capitalize on the next potential move here. So the first thing we will be doing here is to run through the 4 hours time frame, which is where my analysis for this week started. Remember, we had a tremendous week last week on the US All Sports as we capitalized on the strong bearish momentum as we rode it all the way down into that lowest point at the $69 area before we started seeing some buying opportunity during the second half of last week. And in fact, we were able to scoop in a minimum of 700 pips from all of these multiple entries. And well done, congratulations to everyone who capitalized on this opportunity. Now let's see if we can replicate the same scenario for this week. So here on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the month of October, and I was able to identify a simple setup that we will be using to guide our trading decisions for this week. Now, if you look at the structure closely, you will see that since the month of October, price action has been on a strong bearish momentum, and in fact, it's transitioned into what is looking like a descending channel. Now, if we connect the series of lower highs, we have the resistant line of that descending channel, and when we connect the series of lower lows, we have this support line of this descending channel, which further emphasize the strength of the sellers within this time frame. Now, with the situation we have here, usually when we have price fall into a descending channel like this, we want to be looking out for patterns and structures that supports the idea of selling that asset. Now, in addition to these resistance and support line of this channel is this marginal trend line I was able to spot within the channel, which is going to be the major trend line we will be using to guide our decisions for this week. Now, we saw what happened during the course of last week's trading session. Price did break down the descending trend line here, and in fact broke it out again at the end of last week's trading session. Now, in addition to this trend line is our key level for this week, which is going to be situated at the $72 area. Now, let me zoom in so that we can see things clearly. So you will see the $72 area here. This is going to be serving as our key level for this week. And if you look at this level closely, you will see how it had played a major role in determining the direction of price action since the mid-month of November. Right above the structure, it was more of a buying niche. Remember, we saw buy pressure around this area a couple of times at the beginning of this month before price action finally broke down that structure. Now, before the end of last week's trading session, we saw how price action came back to close somewhere around that $72 area to further emphasize how important it is based on this current market structure. And from a technical standpoint, whenever we notice price breaks down a key structure such as the $72 level here, we expect that some point in time price may come back, retest the structure, where continued selling pressure around this area will incite a downtrend continuation. Now, that is one perspective we are going to be looking at today. How are we going to be seeing price break out of the $72 level to incite an uptrend continuation? So you will see we are at a very crucial juncture at this point in time. So what we will be doing next is to scale down into the 1 hour time frame, where we want to see how market participants are currently reacting to our key level at the $72 area. Now, another thing I want to emphasize here is the resumption of what looks like a reversal pattern around this area, something like a double bottom structure where a breakout of the neckline has already happened, and we might likely be seeing price maybe retrace back into the neckline, hold this descending trend line before another wave of bullish momentum will happen. So I just needed to let you know this before we scale down into the 1 hour time frame. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. So what I did this morning was to try and see what is really going on in this market since the second half of last week. Now, while doing that, I was able to spot a couple of trend lines which appear to transition into an ascending channel, though it's not really an ascending channel at this point in time, but we can say that these trend lines here has been supporting a bullish bias in the last 3 to 4 days. Now, the question here is, will these trend lines continue to support the momentum to the upside, or are we going to be seeing price break down these trend lines to incite a sell-off? Now, if you look at the structure closely and look at what has been going on since the beginning of this week, you will see that though the week has started on a strong note, as we saw buy pressure resume this week around the $71.38 level, and we saw price rise into that our key level at the $72 area. And as soon as price tested that key level, we begin to notice selling pressure resume around that area, and in fact it lasted about 3 hours before price action continued to the downside. So we had a range at the beginning of the week, as we saw price confined within the $71.98 level. I can approximately round that off to $72 level, and then the $71.38 level to give us a flat channel to work with for this week. Now, usually when we identify this kind of pattern on our charts, you know how we do it. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, look at what's interesting about the support line. You will see, if you look at it closely, you will see how the support line at the $71.38 level also shares a beautiful confluence with that ascending trend line there. So with this beautiful confluence there, I decided to join a sell position by placing a sell stop order below the $71.38 level, which has already been triggered, and right now I have about 36 pips running in profit at this point in time. Now, if in any way any of you took advantage of this opportunity, well done and kudos to you for capitalizing on that opportunity. However, if you had missed out on this one, don't worry, the week is still very, very early, and we could still see some new chances to join the downtrend continuation if that is going to be the case for this week. Now, how do we capitalize on this, especially if you had missed out on that opportunity? Well, the first thing we want to acknowledge here is the fact that price just broke down both the support line of that range at the $71.38 level, and of course the ascending trend line we spotted earlier. Now, from a technical standpoint, when price action breaks down this kind of key structures, we do expect that at some point in time, price may come back into the structure, maybe into the $71.38 level, or this ascending trend line, where the inability of buyers to break above this ascending trend line would be a beautiful signal that we want to be joining the downtrend scenario. Now, if continued selling pressure persists below this level, those of us who had missed out on that first opportunity could capitalize on the downtrend continuation pattern from that area. So let's see if the market will come back and retest the structure. If it does, we want to be on standby to capitalize on the downtrend scenario. Now, it is not all the time that price action does come back to retest structure. In fact, it could transition into a trend continuation pattern around this area, maybe something like a consolidation phase, transition into maybe a pennant or a bearish rectangle pattern, where the breakdown retest of that structure could incite a downtrend scenario. So that's another thing we want to be looking at. So to guide that decision there, I want to be marking out a level that we will be using to guide that decision. So I think somewhere around the $71 area seems most appropriate to capitalize on the next move. So if we do this correctly, hold on a second, we are still going to bring out our candle chart. Let me give this a different color. So we have the $71 area. So you do want to be marking this one out on your chart right now, as we will be needing it to guide a further decline to the downside. So if we bring back our candle chart, let's see. Okay, we have a beautiful, all right. So we've been noticing some buy pressure here. So we could add more sell position if price action does break down and retest the structure, then we could join another decline to the downside. So as it is right now, and considering this huge bearish engulfing candle that broke down both the $71.38 level and the ascending trend line, I'm of the opinion that price may likely be going to the downside for today. So let's be on standby to capitalize on that one. Then another thing that we usually do in this community is to keep a balanced outlook to whatever structure we are analyzing. So in as much as we're looking out for selling opportunities from this current structure, we cannot ignore the potentials that buyers could still take over this market. Now, for me, the only condition that will make me want to consider buying the US All Sports this week or in the first half of the week is for price action to climb and break out of that $72 area, which happens to be our key level for this week. And you know how we use our key levels in this community. As long as price remains below the key level, we continue to look out for patterns and structures that supports the idea of selling. And if price breaks out of our key level, we will continue to look out for patterns and structures that supports the idea of buying that asset. So these are my views on the US All Sport. Now there's something I would like to emphasize here, that is we might be able to see an opportunity to join a buy position even before the breakdown of the $72 level happens. Now the only way we can join a bullish momentum before the $72 level happens is for us to see that price action transitions into a series of higher highs and higher lows within that area. And if sellers find it difficult to break down the $71.38 level, as we could, if we continue to see buy pressure above that structure, then this could welcome some buy positions even before the breakout of the key level happens. So let's take this into consideration, mark out these levels on our chart, and let's see how the market is going to play out from this current structure in the next couple of hours. So this is my simple view on the US All Sport for today. If you have any questions, feel free to let me know in the comment section. Then there's some other things I would like us to be aware of which are affecting the market sentiment in this particular market. Now, behind the scenes, there is this the strong NFP data which came in on Friday, pointing to a resilient US economy, and this also has prompted some optimism over the outlook for increased demand in the US. Now, US considered to be the second largest consumer of oil, and with a buoyant economy, it shows that we might likely be seeing some increase in demand. So what this simply means is that we cannot ignore the potentials that buyers can still come into this market. Then secondly, there is this skepticism that the recent production cut announced by the OPEC Plus will be enough to offset rising supply from countries outside the OPEC Plus jurisdiction and waning global demand, of course. Now, this along with weak economic data from top importer China raises concern over fuel demand and should cap any meaningful appreciating move for the US All Sports. So coupled with all these factors, we might, in fact, last week, the China's General Administration of Customs reported on Friday that the crude import fell 10% from October to a 4-month low in November, which is something not encouraging for the oil market. So it's more like we are caught within an imbalance of a buy and sell opportunities. So we want to be using our technical structures identified on the chart today to guide our decisions going forward. So you do want to be marking out this level, as these levels will help us to position ourselves for whatever move the market is about to make. So if you have any questions whatsoever as regards to this current setup or as regards to my explanation so far, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, so I can see a handful of comments here. Greetings from a lot of us here. Carlo Loachico, good morning. Nikki74, Camilo 1973, Remy for sure, good morning to you. Valia, good morning to you. Madba, good morning to you. Good morning to you guys. Thank you for checking in. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. So, the next asset on our watch list for today is the USTech100, another asset which was one of our most profitable asset for last week. As you remember that we took advantage of both buying and selling opportunities, and in fact, in both instances, price moved significantly well in our favor, allowing us to scoop in over 600 pips in profit across board with multiple entries from both buy and selling opportunities. Once again, congratulations to everyone who was part of this profitable journey from last week's trading session. So today we are going to be looking at how we will be preparing ourselves for this week's trading session on this asset we are about to talk about here. Now, the first thing we are going to be doing is to try and have an holistic perspective into what is going on in this market. And in fact, my analysis on the USTech100 started on the 4 hours time frame. Now, on the 4 hours time frame, I really do not have anything complicated here on this particular asset, as what I did was to take into consideration the nature of price action in the last 4 to 5 weeks. And if you look at this structure closely, you will see that since the mid-month of November, price action has been confined within a range that is the 16,160 level and the $15,750 area, to emphasize the level of uncertainty going on in this particular market. So it further tells us that at this point there is an indecision going on right now, and it's appropriate that we exercise patience and wait for a beautiful setup to help us join any potential move. Then another thing I would like to emphasize here is the fact that price action has been on a strong bullish momentum, and in fact you will see that we had an impulsive bullish leg that started during the last week of the month of October, bringing us into this level, and we might likely be seeing a situation where this nature of price action could transition into an uptrend continuation pattern, where the breakout of the resistant line at the 16,160 will be welcoming another wave of bullish momentum here. However, in as much as this could turn out to be an uptrend continuation pattern, we cannot ignore the potential that it could also incite a reversal setup, maybe in anticipation of a retracement phase, which could be as a result of profit-taking activities to push price to the downside. Psychologically, if we look at this from a psychological perspective, those who had bought the US Tech 100 at a cheap price, let's say around the $14,000 level, and who have amassed over $1,000 in profit from this asset on one single unit, may want to start considering taking some profit off the market, and that could result into a reversal setup that could incite a retracement move to the downside. Now we are at a very, very crucial juncture in this market. So what I did to guide our decision for this week, is to identify a key level within that range, which we will be using to guide our trading decisions for this week. So I was able to come up with a $16,000 level, a strong psychological area, which has played a major role in determining the direction of price action since November. If you look at the structure closely, you will see how this level was initially a selling niche at some point. We saw a little bit of a breakout. Price came back, selling niche. Look at what happened here, selling niche. We saw price selling pressure resume again, though we had a little bit of a breakout here where price tested that new high, had a 16,160, and since then price action has been trading below the $16,000 area to inform us of how this area can be considered to be a strong supply zone. However, during last week Friday's trading session, we saw price break out of this structure again. Now the question is this breakout a true one or a false one? Now, since we have our key level at the $16,000 area, and if it happens that price drops back below the $16,000 level, we will be seeing this as an opportunity to join a bearish momentum, as price will have been back within the seller's territory as long as price remains below the key level. However, if the breakout of the $16,000 level happens to be a true one, then we might likely be seeing price retrace back into structure where the continued buy pressure could incite a move that will break out of the resistant line of that range. So at this point, you would agree with me that we are at a crucial juncture in this market where we do want to see how market participants have been reacting to this current structure since the beginning of this week. Now, to do this, we will be scaling down into the 1 hour time frame, where we shall be looking at what has really been going on since the beginning of this week. Now, the first thing here, you can see we have our key level very much intact at the $16,000 area, and price action is still trading above the key level. Now, if you look at what has been going on since the beginning of the week, though price started the week on a bearish note, as you will see, continued selling pressure around the $16,097 area incited the bearish momentum all the way into the 16,037 area, where we begin to see the emergence of buy pressure resume around that area. Now we have a flat channel to work with, as price action is currently confined within the $16,097 level and the $16,037 area to emphasize the level of indecision going on in this market. In fact, we have a tight range of $60 running right now, and you know how we do it. Whenever price action falls into this kind of range, we want to exercise patience and wait for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if we consider the momentum the week started this week, you'll see it was more of selling as we have an engulfing bearish candle bringing price down into that support line. It appears that sellers may likely be dictating the pace for the first half of this week. Now, in the last 4 hours, you will see the nature of every of this candle was more of a sharp rejection of that $16,060 zone. As you will see, the character of the week of this candle reveals that sellers are very present at this juncture in the market. Now, how do we intend to sell if price would really want to be going to the downside? Well, personally, I would like price action to indeed break down that key level at the $16,000 area for me to feel comfortable joining a sell position. However, since we have a support line here at the 16,037 area, we could join a bearish momentum here, though it's quite risky, but let's join it that at the breakdown and retest of that structure while we be on standby to move our stop losses accordingly as soon as price moves significantly well in our favor. And when price gets into the key level here, we ensure that all positions are locked in, and let's see how the market will react to the structure. Now, if price breaks down the key level at the $16,000 area, then selling pressure will now welcome more selling opportunities. So at that time, we will be having about 2 positions running, hereby maximizing the potential of that bearish move. However, if price gets back into the $16,000 area and we begin to notice by pressure around this area that is sellers find it difficult to break through, then at that point we may start considering buying, but I will prefer joining the buy positions at the breakout retest of the $16,037 level. Then if price continues to climb up and breaks out of the resistance line of this range at the $16,097 area, then we will be adding a buy position to the existing one. So this is how we are going to be managing our positions on the USTech100 today. So our center of focus basically is between the $16,097 area and the $16,037 level, where depending on the direction of the breakout will determine where we shall be positioning ourselves for the next move. So if you have any questions as regards to the current setup, or probably you need some further clarifications, feel free to let me know in the comment section. And I will be taking the next 10 to 15 seconds to wait for your questions or inquiries, and you can as well use that time to mark out these levels on your chart. Thank you very much, One Murphy G. Best of luck to you too. Good morning, Boo, and good morning, Seagull. And Seagull is asking what's update with US oil. I think we just talked about the US oil about some 10 minutes ago. That means you came in very late then. So we already talked about the US oil, Seagull. All right. So in the absence of no further questions, I want to assume that we are all on the same page. And in that regard, we shall be moving on to the next asset on our watch list. And in fact, I'm caught up within taking the GBPUSD or the USD JPY for this week, as I'm beginning to see some interesting setup unfold on the USD JPY as well. But let's see. I will just go for the GBPUSD unless someone comes in the comment section and says we should do USD JPY instead. So I will be riding into the GBPUSD at this point. So the next asset we will be looking at this morning, it's going to be the GBPUSD. And in fact, I'm beginning to see some interesting transition of price movement in the last 3 to 4 hours right now. And at this point, I noticed that over the past 12 hours, trading in the GBPUSD pair has been limited to the range of 1.25580 level and the 1.25350, indicating a lack of clear direction. Um, Directional bias amongst market participants, especially during the Asian session. However, it is important to note that price action, the pound sterling has a tendency of continuing to the upside, as we have price still trading above an ascending trend line, which I will be discussing with you in a moment. So with that being said here, let's run through the higher time frame and let's look at things from an holistic perspective before we delve into how we will be positioning ourselves for the next move. So what I did here on the 4 hours time frame was to take into consideration the nature of price action since the beginning of the month of November, let me put it that way. And in fact, I have a couple of ascending trend lines here, which buttresses the fact that the pound sterling has been on a strong bullish momentum in the last 4 to 6 weeks. And if we connect the series of higher lows here, we have a couple of ascending trend lines. Look at this one right here. We have series of higher lows and we have the major ascending trend line right here. Now, you know how we do it in this community. When we have an ascending trend line, we want to continue to look out for patterns and structures that supports the idea of buying that asset. Now, in addition to this ascending trend line, I was able to spot a key level at the 1.2500 area. So let me show you what things are looking like on the daily time frame so that you can see how important the 1.2500 level is since the month of April of this year. That's about an historical data of about 7 to 8 months, and you will see how the 1.25 area had played a major role in determining the direction of price action. Look at what happened here in the month of April. It was more of a selling niche. Look at what happened here. Selling, of course, a little bit of consolidation before price broke out of that structure. We saw price came down again, breakdown, retest at this point before we finally saw a breakout of the structure in the month of June. And in fact, this lasted for about 2 to 3 months before price action did break down the 1.2500 level again. Now look at what happened a couple of weeks ago. Price broke out of the key level one more time, and as at the end of last week's trading session, we saw that as soon as price tested that key level at the 1.2500 level, we saw a little bit of buy pressure resume around that area, which further emphasized how crucial this zone is for us for the coming week. Now, with the situation we have right now, you would agree with me that we are at a crucial juncture in this market where price action is back into the 1.25 area. Now, the question going into the new week is how price action will be reacting to this 1.25. Are we going to be seen by pressure resume above the 1.25 area to inside more buying opportunities that will probably break out of the 1.273 for this week? Or are we going to be seeing a situation where price will be breaking down the 1.25, our key level, to incite a sell-off, maybe back into the 1.2200 level? So you see, we're at a very crucial point, and depending on how market reacts to this level will determine what our next line of action will be. So to make things a little bit easy for us to position ourselves for the next move, I was able to identify a trading setup right here on the 4 hours time frame. So right now, price action is still above our ascending trend line, which lines up with the expectations of looking out for buying opportunities. So at this point that price remains above the ascending trend line, we have no business considering selling the GBP USD. So we will continue to look out for buy pressure, and if price goes on to break out of the 1.25700 level, we had more positions to our existing trade. Now, with this information we have gathered here on the 4 hours and daily time frame, let's scale back down into the 1 hour time frame to see how participant has been reacting above the ascending trend line. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, if you look at the structure since the beginning of the week, you would have noticed that price action was, for the first 12 to 13 hours of the week, price action was more or less confined within a range at the 1.25580 level and the 1.25350 area, to emphasize the level of indecision going on in this particular market. And now, coupled with the fact that price action is trading above the ascending trend line we spotted on the 4 hours time frame, we shall be looking out for buying opportunities at the breakout of the resistance line at the 1.25580 level. Now, I already have a buy position triggered after placing my buy stop order above that structure, and if you had capitalized on that move, well done and kudos to you for being on standby to capitalize on that one. However, if you had missed out on that opportunity, it's okay. The week is still very, very early. Let's exercise patience and see how the market will be reacting to the structure. Now, from a technical standpoint, whenever price action breaks out of a key structure such as the 1.258, we do expect that price may come back, retest the structure to incite an uptrend continuation. So if you had missed out on this one, let's see if the market will come back to retest the structure, and if it does, we want to be part of the uptrend momentum. However, it is worthy to note that it is not all the time that the market comes back to retest the structure. In fact, it could just continue with the momentum all the way to the upside, or maybe transition into an uptrend continuation pattern at some point to incite that uptrend continuation. Now, in that regard, this is the 1.257 level that we identified on the 4 hours time frame. So you do want to be marking that level out on your chart and adding more positions if price action does break out and retest that structure. So everything on the GBPUSD at this point is screaming bullish for me, and I will continue to look out for patterns and structures that will support the idea of buying this asset. Now, in as much as we maintain a bullish bias on the GBPUSD, we cannot ignore the potentials that sellers too can also come in. And if sellers are going to be coming in, how do we intend to position ourselves for that move? And what is it that we want to see on this chart that will make us feel comfortable and confident changing our bias from bullish to bearish? Now, if you remember earlier, I mentioned that price action is trading above an ascending trend line we spotted on the higher time frame. Now, the only condition for me to sell is for price to break down that ascending trend line, which interestingly shares a beautiful confluence with the support line of that range we identified earlier. So a breakdown retest of the structure will be all we need to confirm that sellers are likely going to be pushing price to the downside, which I doubt will happen at this point. But if it happens, we do want to be on standby to capitalize on that one. Then I want to emphasize here that remember that we have our key level at the 1.2500 level. So let's ensure that when price gets into that structure, we move all stop losses, secure the position, and wait to see how price reacts to the structure. Now, depending on what happens here, will determine if we are going to be adding more sell position, that is the breakdown retest of the key level, or buy if we notice buy pressure resume above that structure. So this is my view here on the GBPUSD. Like I said earlier, we maintain a bullish bias at this point, and let's see how this is going to play out going forward. If you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last asset on our watch list for today. All right, so in the absence of no questions, okay, I can see a handful of comments here. Opebalo says we should do USD JPY. Unfortunately, I didn't see this before we started the GBP USD. I'm very sorry about this. Giovanni6127, good morning to you. NCY09, how can somebody copy your trade? Unfortunately, there is no avenue for that. I'm sorry about that. NCY09, I'm glad to have you around with us this morning. So, in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving right into the last asset on our watch list for today. So the next asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And the week has started on a, let me say, bearish note, as you will see right now. And how do we intend to capitalize on the next move? Are we selling? Or are we probably getting ready to buy? So how do we position ourselves for this move? Well, the first thing first here is that the gold prices continue to linger around a very pivotal zone, which is a $2,000 mark, which I did identify on the higher time frame, and we are going to be talking about that in a moment, and we shall be seeing how significant this area is and how it will be determining how we will be moving for this week. Now, the geopolitical tensions, the geopolitical uncertainties are acting as a buffer, potentially curbing further declines ahead of crucial economic event scheduled for this week. However, it is important to recognize that gold is still facing selling pressure attributed to the stability in the equity markets, reduced expectations for a March Fed rate cut, and a modest uptick in the US dollar, all of which are weighing on safe haven assets such as the gold. Now, market sentiment appears cautious to make aggressive moves ahead of this week's key data and central bank event, and as a result, a cautious perspective is advised, and it's essential to closely monitor how the market would respond to this critical area we are in right now for the next potential move. Now, for us to have a better understanding into this market, we will be scaling up into the higher time frame. Now on the daily time frame, the first thing I did on the daily time frame was to take into consideration the nature of price action since the month of March. And when you do this, you will see that we have a descending trend line, which was actually broken in the month of October. So this trend line here had been supporting the the bearish momentum in the last how many months is that? 1, 2, 3, 4, 5, 6 months before price action finally broke out of that descending trend line to hit a record high at a 2,143 level. Now the question is, will price action retrace back into the structure that was broken? Maybe, to incite an uptrend continuation? That is a very, very important question we do want to be answering. Now, to answer this question, we need a key level that we will be using to guide our trading decisions for the week, and this is where the importance of the $2,000 level comes in. Now, if we go to as far back as the month of March, you will see how this level had played a major role in pushing price to the downside. So you will see that as soon as price remains below this level, you see how sellers get stronger, taking the market away from buyers to push price to the downside. Look at what happened here in March. Look at selling pressure. Then we saw a little bit of consolidation phase, which lasted about a month before a little bit of a breakout happened. And then we saw what happened in the month of May as price broke down the structure. And since the breakdown in the month of May, price action had remained below the $2,000 level. We saw some attempts during the month of October to break out. It failed. Selling pressure resumed again before price action finally broke out of this level on the last trading day of the month of November to incite that astronomical high we saw at the 2,143 level. Now, since price tested that new high, you will see that price was back into the $2,000 level, had in fact it closed around that area as at the end of last week's trading session. So at this point, you would agree with me we are at a crucial juncture. Will buy pressure persist above the $2,000 level to incite buying opportunities to the upside? Or are we going to be seeing a situation where price will break down the $2,000 mark, maybe to retrace back into the descending trend line, in anticipation of another wave of bullish momentum? Now, to get a better perspective into this, have been able to identify a simple setup that we will be using to position ourselves for this week. Now, scaling down into the 4 hours time frame, I was able to come up with something simple to guide our decision. And what I did here was to consider the nature of price action in the last 5 to 6 weeks. And if you look at the structure here, you will see that we have an ascending trend line, a couple of them actually. And you know how we use our ascending trend line. As long as price action remains above the ascending trend line, we shall feel comfortable in a buy position. Now, in addition to the ascending trend line, remember this is our key level that we identified on the daily time frame, and that if price remains below that key level, we want to be looking out for patterns and structures that supports the idea of selling. Now, let us zoom right into what has been going on here since last week Friday. We saw price break down that ascending trend line right here. Now, the question as at the beginning of this week was, will the breakdown of this ascending trend line turn out to be a false breakdown, or will it turn out to be a true one? Now, to know if this is going to be a true one, we need price to remain below the $2,000 level to emphasize the strength of the sellers here. Now, let's scale down into the 1 hour time frame to now see how participant has reacted to this key level since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. As you will see right now, that since the early hours of the week, it was more of though it was we have a consolidation phase, but it was more of a bearish momentum. As you saw here, the week started at around the $2,007.50 level, and then we saw price drop down into the 1,995 area, giving us a range. As you will see, price has been confined within the $2,007.50 level and the $1,995 area to emphasize the level of indecision going on in this market. Now, price still trading around is not far away from our key level, so we are still at a very crucial juncture in this market. But the fact now is that price is below our key level, and whenever price stays below our key level, we want to be looking out for patterns and structures that will be supporting the idea of selling that particular asset. Now, with the situation here and with at the support line of this range identified at the $1,995 level, I already had a sell stop order and I have a sell position running at this point in time. But one interesting thing that is going on here in the last 1, 2, 3, 4, 5 hours after the breakdown of that line happens is how the $1,991.50 level has been negating all attempt by the sellers to continue that momentum to the downside. And for me, this may be a red flag that buyers are probably building a momentum behind the scenes to push price to the upside. So first of all, let's mark out that level, as we will be using it as a yardstick to guide trading decisions for this week, for today. Now, price still remains above this level. You will see, despite the breakdown of the support line, we continue to see buy pressure, negating all attempt by the sellers to break through the structure. And for me, this could be a red flag that buyers may take over this market anytime soon. Now, if buyers are going to be taking over this market, where is it that I want to be joining that uptrend move? Well, I would like to see price action climb back above my key level situated at the $2,000 area, where at above this level will feel comfortable for us to be within a buy position. Remember, when we have key levels and price breakout of our key level, we continue to look out for patterns and structures that supports the idea of buying. So I will not be buying unless price breaks out of my key level at the $2,000 level, and if we are lucky enough, a retest of structure will be a beautiful confirmation to give us the confidence to be looking out for more buying opportunities. And if price goes on to break out of the $2,007.50 level, we will be adding more buy positions to our existing trade. So like I told you earlier, I'm still in a sell position right now, and if price goes on to break down the $1,991.50 level, then I will feel confident that sellers may likely be dictating the pace, at least for the first half of this week. So placing a sell stop order below the $1,991.50 level makes quite a lot of sense here. Now, there is a caveat to this whole setup which I would like to call our attention to, and this is the fact that we should not ignore the potential that this whole transition of price action could still evolve into a reversal pattern that will incite an uptrend move. Now, initially at the beginning of the week, I was thinking that price may transition into a double bottom structure where the inability of sellers to break down the 1,995 may incite a breakout of the neckline of that reversal pattern to incite an uptrend move. But since price action has already broken down this 1,995, we may see price transition into another form of reversal pattern in the form of an inverse head and shoulder. Now that price has broken down the structure, we might likely see a situation where price drop a little further, then comes back up into the $2,007.50 level, which will be serving as a neckline, and then come back into the $2,000 area to now break out of the neckline to incite an uptrend move. So what I'm simply saying here is that if price action goes down and break down the structure, let's be vigilant enough to move our stop losses to secure the position, as it could still transition into a reversal setup. So let's keep this in mind while we continue to monitor price action from this area. So this is my simple view on the XAUUSD. Let's see how this will play out in the next couple of hours. And in fact, if you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we round off on today's trading session. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So I can see a couple of comments. Sergio, good morning to you. ComD says good morning from Dominican Republic. Glad to have you around with us this morning. ComD. Steamroller says, oh, thank you very much. Do have a wonderful day too as well. Thank you for being around with us this morning. Queen Wild says good morning. Good morning to you. Akul904. Good morning to you too as well. Well, in the absence of no questions, I want to assume that we are all on the same page, and it's on this note I will be rounding off on today's trading session. Well, so far for today, for this week, we are going to be monitoring 4 major financial assets, which included the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify simple trading setup using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action, and at the same time strategically position ourselves for the next potential move for today. If you joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, if you do, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you will get to understand how our analytical approach works and eventually be able to use that information to make your own independent trading decisions. And I just saw a comment from Opebalo says, good, okay, thank you. Today's session really answered more. Okay, no problem. You are welcome. Glad to have you around. Familia 10, good morning to you too as well. So, always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. And in that regard, you do want to have a well-defined risk management strategy for every positions you take from your portfolio, as this will allow you to be able to protect your positions in case price action goes the other way, or the opposite of whatever plans we had. So, on this note, I wish us all the best of luck, and I look forward to seeing you again, same time tomorrow, 10 a.m. UTC, 11 a.m. West African time. And as we come here again to review how well this asset have been doing, and at the same time prepare ourselves for tomorrow's trading session, which promises to be another exciting one as we look forward to the beginning of the economic events for this week. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.